Expectations that people will put money on it for a Fed funds rate cut the end of this month. For example, we had 1 out of 3 traders expecting we would see up to a half-point cut in interest rates at the end of July. That is down to a little under 9% as we speak right now. And what had been 100% certainty on the investors' part that we would see rates cut by at least 0.25%, of that has dipped, depending on what you're looking at, anywhere from the high 70s to the high 80s. So the likelihood of that is eased back a little bit. They're still optimistic rates will be cut, maybe not so soon, or maybe by not as much. The read from market watcher Paul Dietrich. We've got Jeff Korzenik with us, or Zenik, I apologize, and Small Business and Entrepreneur Council President Karen Kerrigan. Karen, if you had to wager a guess what the Fed does the end of this month, would it be a quarter? Would it be a half? Would it be anything?
I think they'll do something. It's too early to tell. I think a lot can happen on the trade front, Neil, in terms of what happens with China, what happens with USMCA. I mean, yesterday, China drew its red line in the sand with regard to what they want out of a trade deal, and they want all the tariffs lifted. And our negotiators are saying, no, they don't think that's going to happen. So I think there's still some unknowns, and a lot can happen leading up to now and the end of July.
Paul Dietrich, to the point that Karen touched on, it depends what happens on the trade front. A lot of people think if we score a deal with China, you don't need to cut rates, or certainly as soon. Where do you stand?
I think there's some truth in that. I believe that we will not have a rate cut until September. It'll be a quarter-point rate cut. But next year is going to be the year when we're going to see multiple rate cuts. I hate to be cynical, but I live here in Washington, D.C., and I've been talking to people on both the Democratic side and the Republican side of the presidential elections, and everyone believes that this administration is going to use every tool, every lever of power that it has in order to keep this economy going through the election. And one of the best tools it has is rate cuts. And I think we're going to see at least 2 rate cuts, if not more, next year.
That's assuming the administration would be able to control that. You're saying that Jerome Powell would be so significantly pressured that he'd acquiesce to that?
Yes, because, I mean, we've got 2 new people, Shelton and Waller, coming on to the Federal Reserve.
If they're approved.
If they're approved, they're going to be approved. Both of them are really good economists. And so he's going to have a big majority. And I think most people thought that the last rate cut was a mistake. By law,
the
rate hike was a mistake. By law, they're supposed to look at keeping unemployment low and inflation low. Well, we have no inflation, hasn't even met its target rate. We have the lowest unemployment in 50 years. What in God's name were they doing hiking rates the last time?
All right, well, I'm looking at this, I'm sorry, Jeff, this employment report. I don't see a reason to cut. I don't see a reason to move so quickly, given the fact there aren't a heck of a lot of arrows in the Fed's quiver here. Save it for when you really need it. What do you think?
Yeah, we've been counseling our clients all along that a rate cut is not a slam dunk, and we feel even better about that today. Less than a 50% chance that they cut in July, and I'm not sure even come September that it will be necessary.
So if it doesn't happen right away, Karen, and the market has built expectations that it will, you could get back to just good news being good news and be okay with that for the markets. What do you think?
Well, yeah. I mean, in terms of, GDP growth, and in terms of if the jobs are moving in a great direction, job growth, in terms of wage growth, and it looks like, based on, I mean, at least on the small to mid-sized business side and entrepreneurs that we talk to, they're still very, very optimistic about the outlook for the economy for this year. They're looking at investing more. They're looking at hiring more. So, if nothing is done from a policy perspective on the tax and regulatory side, I think it's going to be, we're still a very bright outlook for the remainder of 2019.
All right. It's interesting, Jeff, when I was looking at the particulars, a lot of these S&P 500 companies, I believe 8 out of 10, who had telegraphed that their earnings momentum could slow or be compromised. There's plenty of reasons to to worry. And markets, I know, climb a wall of worry. But the investment mood is not off the charts crazy. So you could make a convincing case that this rally on that basis alone could continue. How do you see it?
Yeah, I think there's room to grow. One of the things that really struck me about the labor force participation rate is when you dive into the components, we saw a big move in prime age female labor force participation rates. And if you look historically, we still have room to go. So the slack that may be left in the labor force is at least in part in prime age females. If you go back to the old highs in April of 2000, that would suggest we have a long runway in the labor force, which is A, reason for the Fed to stand pat, and B, also reason to be very positive on economic growth prospects for the future.
All right, part of the things we saw in the latest employment report, and Paul, you know this, is that we had 335,000 people coming back into the workforce, and that worked to pushing the unemployment rate up just a teeny bit here. But do you still see that phenomenon continuing?
Yeah, I see that phenomenon continuing, and I think that's going to happen. Part of it is wages are going up, so it's giving people an incentive to come into the labor market. But I should say the economy is slowing. Now, we're still growing, but at a much slower growth than we saw last year. And so that's why I think that we ought to rectify the mistake they made in December by hiking rates. And I do think we need at least one cut by 25 basis points in the Fed rates this year.
All right, we'll see. It's going to be an interesting development one way or the other. Guys, I want to thank you very much. The Dow down about 108 points right now. We'll keep monitoring that because this is the first trading day after the record set in all the major market averages on Wednesdays.